Welcome everyone to today's event showcasing nonprofit fintech partnerships that are meeting the complex needs of workers and students. Glad you could join us today. Next slide, please. Just again, some Zoom instructions if this is not your preferred platform. You can please use the, we encourage folks to use the chat function at the bottom of your screen to ask questions of our speakers, and we'll be reading those out. And you can also unmute yourself and ask those questions directly if you prefer. And then share your video. We encourage folks to have their videos on if they're comfortable doing so. And we also have closed captioning that folks can access as well. Next slide, please. So just to go over our agenda for today, I'll share a little bit about the Nonprofit FinTech Exchange and what we do, what we're all about. My colleague Carla will give you an overview of the grant program, and then you'll hear from our grantees from the Nonprofit FinTech Exchange partnerships, whose projects we're very excited for you to hear about. And as I said, there will be time for you to ask questions, and then we'll close out. Next slide, please. But before we dive in, I will share our antitrust statement as an organization. So while we want to foster an open and honest dialogue and create an atmosphere of trust, we want to be aware of what may appear to be antitrust conflicts. Here at the Financial Health Network, we abide and require our attendees to abide by the spirit and letter of antitrust laws. Next slide, please. So this is the Nonprofit FinTech Exchange team. I'm Amelia Josephson, and my colleagues on this initiative are Josh Sledge and Carla Enriquez, who you'll be hearing from in just a moment. Next slide, please. The Nonprofit FinTech Exchange is a program of the Financial Solutions Lab, which is a $60 million 10-year initiative that's managed by the Financial Health Network, in collaboration with founding partner JPMorgan Chase and with support from Prudential Financial. Our mission at the lab is to cultivate, support, and scale innovative ideas that address the needs of populations facing acute and persistent financial health challenges. And that includes communities of color, women, older adults, and individuals with disabilities. Next slide, please. Within the Financial Solutions Lab, the Nonprofit FinTech Exchange is focused on supporting nonprofit fintech partnerships that can advance a more inclusive fintech landscape and result in more products designed for and delivered to underserved communities. So we administer the grant program that you'll be hearing about today, and we also administer a membership program on an ongoing basis. So we send emails, we write reports and blog posts, and we host events like today's events where you all can connect with each other and where those partnerships can really be born. Next slide, please. So my colleague is going to pull up a couple polls just to give us a sense of who's in the room today. Okay, looks like most folks are coming in from the nonprofit sector, from what I can see. But we do have a strong showing from fintech and financial institutions as well. I'll share those results. Great. One more poll. It's looking like most folks in the room represent organizations that primarily serve low to moderate income individuals, which is about what we'd expect. And our third poll. Great. Looks like most people are here to learn about NFE and hear from the grantees, which is what today's event is all about. All right, next slide, please. Carla, this is where you take over.
Awesome. Thank you so much. First of all, we would like to thank everyone who applied for this year's grant and looking to support the student and worker financial health, especially during this time. Our grant program is now in its second year, and this year we received 37 total applications from various parts of the US, as you can see. And 14 of these applications had a national reach. And from there, we picked 7 nonprofit fintech partnerships that will be supporting either students or workers in their financial health. And these type of partnerships represented a referral, program integration, system integration, and co-design and delivery. We'll welcome you to check out our report about nonprofit fintech partnerships and the best practices to form them. And I will be adding the link of that report to our chat. And now I would like to introduce you to our 2020 FinTech Exchange partnerships. First, AM Money and Neighborhood Trust Financial Partners, Steady and Saverlife, Hebrew Free Loan Society and FinEquity, Change Machine and HBCUs, Compass Working Capital and Next Step, and Canary and Spring 4, Leap Fund and the Director Council. And with that, I'm going to pass it back to Amelia that will give you all instructions on what we're going to see today.
Thanks, Carla. So we'll be introducing each of the organizations that make up these partnerships. And each partnership will have 5 minutes to present. They've sent us their slides. Please add your questions in the chat and we'll kind of compile them on the back end. We expect to have time to ask 1 or 2 questions of each partnership. And with that, if we go to the next slide, I will turn it over to Kim Kaplan, Deputy Director of Hebrew Free Loan Society, and Brianne Cornish, President of FinEquity.
Hi, welcome everyone. I'm Brianne. I'll be presenting on the partnership between FinEquity and the Hebrew Free Loan Society. Next slide. So yes, so to discuss, we have sorry, our slides are a little off, but sorry about that. But the financial challenge that we're addressing specifically relates to credit score and credit tier quality. In particular, credit checks impact a lot of these elements in the slide, including stable housing, cell phones, utilities, auto insurance, employment, health coverage in regards to a credit check. But for the population we serve, they're actually impacted at a greater level. So we are serving customers who are workers who are employed in New York City, but what they all have in common is that they've experienced long-term prior incarceration. And as a result, specifically access to these important resources is harder, and they're more likely to experience what is deemed to be called stale credit, it being having invisible credit, or having not enough credit history to get access to some of these services. Next slide. So here's our, go back one slide, sorry. So here's our customer journey. It starts with our, kind of prospective customers thinking about the barriers they face that relate to credit. And this is a quote for someone we got a couple of months ago that said, I've been home for several months. I tried to rent an apartment. They rejected me. And what I was told was that I had insufficient credit. So this person's employed, but still has insufficient credit for particular resources that they're trying to offer. When you have clients like this, ideally, especially for people who've experienced long-term incarceration, they're going to be working with reentry partners, and that will be our kind of referral source network. So the client would go to common reentry organizations that they might already be participating in, or hear about our service through word of mouth, and that would lead to them showing interest in the FinEquity program. And so the FinEquity tool specifically, we would onboard them into basically a 2-month at max financial credit literacy program that offers bite-sized credit literacy, plus what we like to call a credit simulation. It's kind of a preparation program that simulates their ability to build credit that's available to them via their mobile phone. And if they don't have access to SMS or text, we also have kind of an offline component as well. But that would be a kind of financial education and credit simulation that happens, that the client kind of goes through and is able to kind of gain knowledge around financial know-how, but also have practiced credit building before we enroll them into their next step for those who are interested, which is actual credit building. This is what's available to the Hebrew Free Loan Society, who are going to be offering a no interest, low dollar credit builder loan that will be available to participants for at least 6 months, if not more, between 6 to 12 months. And as a result, this customer will have at least 3 outcomes. One, they'll have their financial know-how amplified through material that actually speaks to their experience. Most importantly, for the people that we serve, they'll have a recent and positive credit history to address some of these barriers that they've experienced, especially if they're credit invisible. And lastly, they'll have the ability to have assets locked in the future in regards to building a positive relationship with a lender, Hebrew Free Loans Society, that they can go to in the future if they want to. That's contingent on this relationship they've just built through our pilot. So next slide. So this is our contact information. I'll kind of finish there, and I'm excited for any questions and comments you might have. Feel free to ask us questions here or contact us through any of these methods below. Thank you so much.
Brianne, I was wondering, before we move on, what kind of credit score improvement you expect the clients served to see?
Yeah, so what we've talked to, because we have advisors who do credit building in this space, and specifically I've worked with those who are invisible or have stale credit. And so we expect in 6 months to see the highest jump of at least 20, to one, they'll have a visible score, and the score will jump to the 600s because of what they started with, that it was an invisible or stale. So that's the kind of major outcome that we're expecting, at least within the 6 months. Once you get past there, that we think that within the 6 to 12 months, everyone participating would have a benefit of between 5 to 20 points, if not just this idea of positive history that can be available if somebody's looking at their credit report and wants to see the positive history. Maybe they don't see such a substantial jump in their credit score, but they see quality of positive information that would help their determination.
One of the questions that came in is, what are the interest rates that this population sees?
Great, that this population sees. So I'll answer, I'm not sure how to, I'll answer both ways. So one, for us, the loan that we provide is 0 interest. So that's kind of our commitment to our model, which is that it's 0 interest, because we think that's important. In regards to what the interest rates that they might receive outside, because they're dealing with stale credit or credit invisibility or not a lot of recent credit history, they get hit with very high interest rates or high deposit rates. The highest, whether it's a cell phone or any kind of access or loan that they're trying to access, they get hit with the highest rates. And that kind of leads to this interest in going to potentially predatory lenders who are the only ones who might accept or offer a loan rate at a very, very high rate. So we want to provide this option and make sure that it's no interest, so that there's a benefit and not so much of a drawback for them.
And there is one exception. I'm Kim Kaplan. I'm the Deputy Director at the Hebrew Free Loan Society. And I just want to note that the exception to Brianne's comments, which are very true as far as the high interest rates that a lot of these lower income, formerly incarcerated clients face, is the Hebrew Free Loan Society. All of our loans are completely interest-free. We're also non-sectarian. I know the name can be confusing, but both the clients of FinEquity who have taken the initial low dollar loan in order to build their credit, and anyone else who meets our overall requirements as far as eligibility go can apply for a completely interest-free, no fee loan from the Hebrew Free Loan Society at any time.
Great. We saw some other questions come through. We encourage folks to reach out directly to Brianne and Kim for follow-ups there. And we'll introduce our next presenters, George Reuter, Director of Impact and Innovation at Compass Working Capital, and Sean Boyce, CEO of Next Step Consulting.
Thank you, Amelia. We can go on to the next slide. Good afternoon, this is George from Compass. Appreciate that introduction. So Compass Working Capital's North Star is expanding the federal government's largest existing asset building program for families with low income. As many people, I think, on this call probably know, federal anti-poverty programs have generally focused on incomes and earning-based interventions. This is despite the fact that asset poverty tends to be even deeper. About 12 or 13% of families in the US live in income poverty, whereas the asset poverty rate is about twice that. In Compass's hometown of Boston, a third of families are asset poor. If we add a gender and race lens on top of this inequalities, we find that for every dollar a man owns in this country, 32 cents women own. If we look at Black and Latino women, own only 1 and 2 cents respectively. So it's important that if we're interested in solving or even making a dent in this issue, that we're thinking about solutions that scale to this size. So I want to talk a little bit about what FSS and how it really sets up an opportunity to scale if we can unlock it. If you can go on to the next slide, please. So FSS is a voluntary program that is linked to HUD's federal housing assistance programs like Section 8. And so when you receive federal housing assistance, your rent is based on your income. And as your income goes up, your rent also goes up. This can make it really challenging to set aside money for your own financial goals. And we often hear from the families in our programs that they feel like they are getting by, but they can never just get ahead. FSS changes that. When families in FSS increase their earnings, their rent still increases, but that money that is increased in their rent actually is set aside by the housing authority into a savings account for the clients or for the family's financial goals. So essentially, you save your rent increase. The savings for this program are actually fully funded by the federal government, and it scales with the number of families that enroll. So it's just a tremendous opportunity, a tremendous asset building opportunity for these families. And so we need to think about how we unlock this. If you go on to the next slide, right now, less than 4% of the 2 million people that stand to benefit from this program are actually enrolled in it. So what's stopping them? So there are some big barriers that have to do with just the practice of getting people enrolled in the program. The enrollment process tends to be pretty staff intensive. There's a bunch of paper that needs to be pushed around between different parties. It can take 2 to 3 months to get someone enrolled after they express interest in the program. All FSS programs, including those run by Compass, also include a supportive service component. Compass provides financial coaching that supplements the incentivized savings accounts that I just covered. And so that financial coaching tends to be fairly high cost per participant. It tends to rely historically on in-person services delivered in offices that are located near where the participants live. So all of these barriers create opportunities for us to think about how technology, how applications can help us resolve these and really tap this potential opportunity to provide an asset for low-income families. And Sean's going to talk a little bit about the projects that we're building right now.
Thank you, George. You can move on to the next slide. All right. So what we want to do is we want to tell you the story of our projects from the context of our clients, because that's the most important part of these projects, to build solutions around the specific needs of our clients. So having said that, please meet Tanya. She's a client of ours who's enrolled in the Compass Family Self-Sufficiency Program. And our process begins by interacting directly with Tanya and other clients like her to learn about their specific needs. So what we uncovered as part of this process were 2 specific opportunities where we felt we could improve. And those are around specifically, 1, helping Tanya enroll into the program, and 2, helping Tanya be more engaged throughout the life of the program so that she gets more value out of it. So this is what we've been actively working on. And that's bringing prototypes to clients like Tanya so that they can get more value and help them achieve their goals and satisfy these specific needs. So we move on to the next slide. We'll talk a little bit about some of the goals we help our clients achieve. So important for us to focus on with regard to these projects is that we always need to remain in focus what Tanya and clients like Tanya want to achieve out of their participation in our program. In front of you, you have a list of the most common goals as reported from our clients or what they want to achieve as participants in the program. And it's really important for us to make sure that everything that we were doing with regard to bringing these products to our clients helps it make it easier for them to achieve these goals. So on the next slide, we'll talk a little bit more about the strategy that we use to do so. You can move on to the next slide, please. Thank you. So here you can see kind of a high-level overview of the strategies that we're using in order to do this. And I want to emphasize the fact that some of what we're doing in a rather unique way is that our strategy enables us to build these prototypes in a fraction of the time and with a fraction of the budget of a typical software project. What we're doing in weeks, not months, which is rather unique when you can talk about custom software projects. But why this is so important beyond the obvious is that so we can maximize the amount of time that we spend with Tanya. Spending as much time as possible with Tanya and our clients is critical so that we can learn the things that we've done and how they've made for a better experience for Tanya and clients like Tanya, and then what else we can do to be better in the future. You can move on to the next slide, please. So we want to thank you for having Compass Working Capital and Next Step to be a part of the process. It's an honor to be included. Here you'll find contact information for both George and myself if you'd like to reach out directly. And we're also happy to answer any questions you might have now.
I can kick us off. Maybe one or both of you could speak to what you see as the scale potential for this project.
Yeah, so Compass's goal is over the next 10 years to be able to reach 10% of this 2 million population, 200,000 people. And so the apps that we're building now are meant to set us up for that kind of opportunity and that kind of scale, where we're really reaching a pretty large group of the people who potentially stand to benefit from the program, which is about 2 million. It's really the population that's eligible for this program.
And we had oh, sorry, go ahead, Carla.
We have a couple questions coming. So feel free, if we don't get to all of your questions, George and Sean, feel free to continue answering those on the chat. But one of the questions is, what percentage of the client's rent is saved for them?
Yeah, that's a really good question. And unfortunately, it's like one of the things that's complicated about this program when we explain it to clients and others is it's actually based on the rent that they come in, that they enter and sign their contract documents at. And so the difference between their starting rent and when their income goes up and their new rent, that's how much is saved. And it's the full amount of that difference. But that's a little bit confusing, especially like if you're juggling many other things at the same time. So that's like the full percent that's what's saved into that savings account. So it's really nice. But once you enter the program, all of your rent increases are being saved. I see another question in the chat about whether this app will be developed to be licensed for others. At this point, that's not on our current agenda, although it's something that we might consider down the road once we work with Tanya and others like her to make something that's really helping them.
Great, thank you both. And yeah, feel free to follow up in the chat if more questions come up. We're going to welcome our next speakers on the next slide. So we have Marvin DeGier, Treasurer for the Directors Council and Director of the Evelyn K. Davis Center for Working Families, and Karen Shellcop, Founder and CEO of Leap Fund.
All right, if you go to the next slide, please. All right, my name is Marvin DeGier. I'm here representing the Directors Council all the way from Des Moines, Iowa. The Directors Council is an organization that primarily serves with the CEOs and executive directors that have a large clientele of African Americans or African refugees and immigrants that we serve collectively. Hand it over to Karen.
And I'm Karen, founder of Leap Fund, which exists to find, bridge, and eliminate benefits cliffs and to create a path forward for self-sufficiency and financial independence. So I also have an example of a Tanya, no less. So if you go to the next slide, I want to walk you through what a benefits cliff is and why someone would turn down a raise. So imagine Tanya, she's a single working mother working in a fast casual restaurant as a cashier. So she's been excelling at her job and her boss offers her a supervisor position where she's going to earn $1.50 more an hour. This seems like a really simple decision for Tanya, but her wages alone fail to tell this whole story. Next slide, please. So what her boss doesn't know is that she actually qualifies for a $900 childcare benefit. So if she accepts this raise, her earnings will increase, but she might lose that $900 childcare benefit, which decreases her total income. So this is what's known as a benefits cliff. And to make matters worse, there's no way for Tanya to know if or when she'll even hit a benefits cliff. So instead, Tanya's going to turn down this role for fear that she'll lose the benefit that allows her to work in the first place. So this also means that Tanya stays trapped at her current $15 an hour cashier role, and she's unable to move up the promotion or raise ladder with no growth potential. Next slide, please. So what's happening to Tanya is happening to workers across the country. And this is the hidden next level math that they're guessing at. The most important thing to understand here is that no one knows when they'll hit a benefits cliff. Most importantly, not a benefits recipient, but not the caseworker at the agency, not the financial coach, not the legislator or think tank. But we've built a calculator that finds benefits cliffs. So let me hand it over to Marvin to explain what we're going to do together.
Next slide, please. Thank you, Karen. So all of our coaches from our respective organizations, they receive training on the calculator, and these coaches range from financial coaches, employment coaches, housing coaches, or even educational coaches. All the clients, they have appointments with our coach in person, via Zoom, or via phone as well, to talk about their specific needs. So the coaches in those appointments gather all the different information that's necessary to basically complete the calculator. And then we share that information with the client, and it allows us to just make better plans for those that they qualify for benefits, or also understand the plans we need to start making when they reach this cliff. Because as you can see from that slide that Karen talked about, sometimes when people hit this benefits cliff, the income necessary to make up for that gap in benefits that they lose could look at something like where they were making that $12 an hour, but when they lose the benefits, they would have to make $21 an hour to make up the gap for those benefits. So this tool has been really helpful for our coaches to have that conversation with our clients and be able to kind of help them to better prepare and plan what next steps look like. And that could range from what type of training programs they may need to access, or just understand how to have the things in place to compensate for the loss of those benefits as well. So it's been a very beneficial tool. That's all we have.
Yeah, and thank you. And I twisted Marvin's arm to participate in a pilot before this even started. So we're already in process together.
Great. What kind of feedback have you gotten over the course of that pilot from users?
What Marvin had said, we're finding that people are using the calculator, number one, to understand their benefits eligibility, number two, to see if and when they'll hit a benefits cliff, how they should be approaching job searches, salary negotiation, and the like. So that's what our early results are showing us. We're also finding that the coaches are feeling more tooled up to actually have the conversation about benefits cliffs. One of the things that we have heard from the beginning from coaches is that some coaches, not necessarily TDC's coaches, but some coaches actually avoid having the conversation about benefits cliffs at all, because they don't have anything, they don't know if their client's gonna hit one, and they don't have any advice to give because they have no information. So this has not only opened up an area to have the conversation, it's allowed these coaches to have a greater impact.
Great. Question came in through the chat. Will the calculator be available for others to use?
Yes, we are opening up our new program this month, this coming month, and we're working with any coaching organization. So we're working with financial coaches, employment coaches, workforce development training coaches, caseworkers, case managers, and social workers. So yeah, get in touch if you've got an organization that does coaching.
Great, and we'll be sending out a post-event survey where folks in the audience will be able to indicate if you'd like to connect with any of our presenters. So there will be another opportunity for you to follow up that way as well. Thank you both. And
Thank you.
pull up the next slide. We're now going to hear from Milagros Millie Duboucher, Lead Business Development Manager at Neighborhood Trust Financial Partners, and Daniel Rogers, Founder and CEO of AM Money.
Hi, everyone. Afternoon. I'm Dan Rogers, the CEO of AM Money, and we are here to talk about our program to help low-income college students navigate student loan repayment. So next slide, please. As a quick introduction into who we are, AM is a alternative student loan company that's focused on providing affordable and flexible student financing products primarily to low-income college students. And I'm here today with our partner, Neighborhood Trust Financial Partners, who can introduce themselves.
Hi, everyone. Millie Duboucher here. I am the Lead Business Development Manager at Neighborhood Trust Financial Partners, and we are a New York City-based nonprofit that specializes in offering financial coaching services. So to kind of quickly recap what you see on this slide here, we are experts in delivering live financial coaching. So we have a team of amazing coaches who are the nicest, most personable people in the world, who really prioritize connecting with every single one of their clients to help them to make financial strides. So it's really important to us to offer a service that's filled with empathy and emotional intelligence and sensitivity to these folks, because we're serving a lot of people that are in low-income communities and they're dealing with a lot of extenuating circumstances. One of those circumstances being one that's probably very familiar to many of us, the burden of student debt, unfortunately. So one thing that has come of all of this is that we are now working closely with our partners, AM Money, and we are super excited to help to offer a solution for this issue. Next slide, please.
So,
over to you.
Sure, absolutely. So, I guess to orientate what has kind of brought us together is that we are a student loan company, and our entire approach and model is based around understanding that, the actual risk factors of students whom maybe don't come from much financially, but through higher education are able to move on to a different track into their lives. And as a part of our model and approach, we've always drawn a distinction between understanding that risk and being very proactive about managing that risk. And one of the key risks that we see, particularly for student loan repayment, is that period from between, we'll call it junior year of college to 2 to 3 years after graduation, inherently entails at least 6 or 7 very consequential and very complex financial decisions that our students are not well equipped to navigate, because ultimately the reasons that brought them to us in the first place for support and assistance in college still persist, at least for a period of time after they graduate. And so, examples of that are, having to buy your first car, to get your first credit card, to, enter into student loan repayment. As a personal story, after I graduated from college, I was actually in default for a period of time on a student loan simply because I was unaware that I had loans with 4 different places, and one place in particular did not have my current address. And so ultimately, the question we've asked ourselves is is there a way to be proactive about this instead of reactive? And that brought us to Neighborhood Trust and the work we are doing. Next slide, please.
So our financial coaching service, which we sort of package and promote as the Trust Plus program, is one that can be synced with any company's process. We partner with a lot of employers who say, we want to offer this service to our employees as an employee benefit. We also partner with a lot of fintechs who say, we want to feature your service as a feature of our product because there's a nice complement there. We partner with financial institutions, with lenders who maybe want us to serve their borrowers. So as an example, maybe someone is applying for a business loan and they're denied for that loan, and they would want their applicant to meet with us so that we can better prepare them to qualify for that loan in the future. So we're able to basically connect with at any point in the journey of someone who would potentially be working with us. And in the example of AM Money, we're working with recent graduates. And if you recall from your experiences, there are some very key transitions that happen once you graduate from school. So I don't have a Tanya example, but I now wish I did. It probably would have been a nice recurring theme here. But my example of a borrower journey would be one where someone is graduating from school, and 6 months post-graduation, they need to figure out their payments for student loans. We work with them at that point to help them come up with a budget so that they're prepared to make those payments. So we, as in our coaches, will help them to prepare for those payments. A student graduates and is then placed at a job. They want to know, okay, well, I'm earning some income now. Do I more aggressively pay down my loans, or do I pay down my loan while saving for the future? So our coaches will work with them to figure out what's the best way to go about that while prioritizing building an emergency fund. And I see the comment in the chat, the cosign, yes, yes, yes. We're with you, Brenda. Another example is a student having a reduction in income. So what do they do at that point? Do they continue to pay? Do they pay less? Do they restructure their payment plan? So AM Money will work with them to figure those options are, while also referring them to us so that we can give them a more holistic approach to their finances. And then the last example is here. Unfortunately, given this post-COVID environment, a student is working and then they're laid off due to COVID. So what if they can no longer pay for their student loan? So they work with us in collaboration to figure out how to maybe defer those payments. And then we can also maybe connect them to additional resources to help them get by. So long story short, we work hand in hand to support these students through their financial journey. Next slide, please. So that's all we've got. Here you have some contact information for us. Thank you guys so much for giving us the floor and the platform to connect with everyone. And we're happy to field some questions.
Great. Feel free to pop questions in the chat. But I'm curious to hear how this partnership came about.
Dan, you may have better insight than I, because it came about prior to my time on the partnership team.
Sure. So I feel like that's somewhat of a loaded question, because it started at a event for the Financial Health Network. And so I was on a panel with the CEO of Neighborhood Trust talking about a lot of these issues. And like the point of the conversation was ultimately around, the dearth of products geared towards bringing down the cost of student debt for everyday Americans, and then ultimately around how we don't typically support people in that transition from college into careers, because we just assume if you've made it that far, you have all the answers, when the reality is that's not always the case. And so we started talking about how our, mutual approaches to this problem could be welded together to help people at whichever point makes the most sense.
Great. And I see a question coming in on the chat around, do you see a place for additional partners that can help borrowers fast track paying down their student debt, and mentioning some fintech products that can help with rounding up or otherwise kind of layer in to help with that repayment process?
You want to take that one, or?
Yeah, sure. I mean, I'll provide my vantage point from my perspective. Absolutely. So our objective is to help our clients to reach big, important financial outcomes. So if our clients happen to be borrowers who have student loan debt, then our priority is to help them to have the most appropriate plan to pay off that debt in a way that makes sense, So if these additional partners are doing work to help fast track satisfying those debts, then we want to be a part of that experience, because student loan debt is one piece of the pie. These folks may have other debts, other obligations. We want to make sure that that fits nicely into their overall financial picture. So absolutely, no question.
Yeah, and I would add to that is that a big part of our approach is always to kind of partner with people who have a particular value add or angle on the kind of source of the problem. And a thing I would kind of just highlight is that oftentimes, particularly in this particular moment, the situation can be highly complex, right? Because in the case of a person has to pay off a student loan, but also has to, like, you know, pay a car note or has a credit card bill and things of that nature, it does become a bit complicated to understand, you know, what's the right path forward. And like a part of what kind of brought us to the table is that we organically had to kind of help people understand how to think about not just their loan with us, but all the other stuff that was happening at the same time.
Yeah. Another question came through asking for clarification around when a student would enroll in the program. But yeah, I'll let you take that.
Sure. So at its kind of core, like our program, particularly for student loans, is geared towards upperclassmen in college or people who have just graduated from college. That said, you know, both in terms of what we do and in terms of our partnership with Neighborhood Trust, the hope would be to take what we learn in that moment in time and apply that to other points in that journey. So as one example from our perspective is that we work a lot with, say, like high schools and colleges to kind of help people prepare for and to understand that journey through college and to kind of understand what awaits them. And then, like, obviously, Neighborhood Trust has a broader mandate to work with employers and other types of institutions who, you know, might have customers or people who come later on in the journey, but are trying to pick up the pieces after having, you know, taken a suboptimal path to that point. So much shorter, like, yes, all of the above.
Great. Thank you both.
Thank you.
We'll go ahead and pull up the next slide. So we're now going to welcome Bridget Tate, Director of National Programs at Change Machine, and Dr. Nicole Lewis, Dean of Students at Elizabeth City State University.
Thank you so much for this opportunity. We are excited to be here. We want to personally thank you once again for this grant opportunity. I'd like to introduce Dr. Lewis. In collaboration with Change Machine, we will be working with historically Black college universities and helping to embed financial securities on campus. We recognize that Black communities are hardest hit in regards to the racial wealth gap, as well as building wealth, primarily Black women. And we believe that we are going to be able to address and intercede prior to graduation for students. So again, we're excited for this opportunity. Next slide, please. And how are we going to go about doing this? In partnership with the HBCUs, 4 of them, at this time we're currently working with North Carolina Central University, and we recognize that some of the financial health priorities for students begin with things such as managing debt, sufficient liquid resources, long-term savings, solvent spending planners, and paying bills on time, and helping them to plan ahead financially. And how we made the decision as to what departments we would engage and how we would interact and reach these students was as a direct result of all of the historical knowledge and experience that Dr. Lewis has. And I'm going to toss it over to her to give you some understanding of some of the things that students face on campus specific to Black students. Dr. Lewis?
Thank you, Bridget. So good afternoon. One of the things that that launched us into this conversation and this partnership really is the idea and the reality that, particularly in North Carolina, where we have 6 to 7 what would be considered metropolitan areas, we actually are separated out in tiers. There's 100 counties, and so Of course, we're newly into the 2020 census. We've not gotten that data, but in 2010, the census for North Carolina demonstrated that although we have 55 four-year or more degree granting institutions and 58 community colleges, only 25% of adults in the state of North Carolina actually have a bachelor's degree. And so when we make that connection between that and financial security and stability, then we have to make the presumption that in our institutions where 55% or more of our students are coming from North Carolina, a large number of first generation college students and students who would qualify and be designated as low to moderate income students and coming from those kinds of families. At North Carolina Central, which is where the institution where I was until literally 5 days ago, where I ran the Women's Center, 70% of our student population were female, coming from single family, largely single family women as head of household communities. And the biggest piece that our students do face is this piece around long-term savings and sufficient liquid resources. What presented during the pandemic was, while there was a benefit to students who were in the state institutions that in North Carolina in particularly, who got prorated refunds or reimbursements on housing and lodging, largely that money was not a gift back to the family. It really was filling a hole and a gap in their daily spending and the need for survival. And so wanting to make sure that students didn't get this degree similar to the last group and then have this mounting of debt that was piled on that was already on top of unmanageable debt, that they really began to think through and learn as an integrated part of career readiness and life readiness, financial structures and education that will prepare them before they actually exit our campus to be able to thrive and not just survive beyond graduation.
Thank you, Dr. Lewis. Next slide. An important piece of what Dr. Lewis shared in regards to thrive and not survive is exactly the work that we at Change Machine continue to do. Using our FinTech platform, our financial coaching platform, to assess and coach individuals on a one-on-one coaching, we are able to collect effective data that continues to inform our process and best practice moving forward. The customer journey for these students will look like this. We will create awareness for students to learn about virtual coaching, financial coaching via the HBCU departments. We'll be working directly with the Women's Center as well as the Black Male Achievement Department. Our goal here is to not only engage students in financial coaching and planning for their financial futures, but to also have them weigh in on FinTech products. FinTech products that we at Change Machine have made a commitment to being Black owned or Black developers. We want to help to lift the voices in the FinTech arena in regards to FinTech products from a racial lens that are specific for Black students. These students will come in cohorts of 4, 10 per cohort, that will then test these FinTech products. And I'm gonna name a few and kick them over to my assistant director, who actually is head of these particular products. But some of those products that we're gonna take a look at that are either Black owned or developed by Black developers are, my apologies, and I lost, Goal Setter, Home Lending Pal, and Spend Debt. And that's just to name a few of those. What this will allow us to do is for students to give effective feedback about the efficiency of these products, as well as we will be able to continue to validate these products and host them on our platform. That over 2,000 practitioners are currently on, that would then be able to make product recommendations to those that they serve. And Megan, if you're there, if you could talk a little bit about what that SOI looks like for these products.
Sure, yeah, absolutely. Yeah, so the Seal of Inclusivity is a rubric that we've developed, and that is, we're constantly iterating and learning on to evaluate FinTech products for whether they are going to be able to actually build financial security for the customers that they hope to serve, whether they are inclusive and accessible, meaning whether the products are designed from ideation all the way to after our customer stops using it for the customer to meet their unique needs, meaning that they are, the language that is used is accessible, it's simple, it's straightforward, it's not confusing, it's not purposefully confusing. It's intended to really support the folks that they say that they're trying to support. We also want to make sure a third category is that the products are fairly priced. So there's lots and lots of fintech products out there, and they all cost, different, ranging from free to lots and lots of money. And it's really up to the consumer to decide whether the cost of it is going to be worth it to them. And so we want to make sure that all of the products that we have and that we're recommending to these students are really going to be meeting that need, that there's going to be a value add for them, depending on whatever the investment that they're putting in, whether that's time or money. And then the final piece is we want to make sure that the products are safe. And that really has to do with data collection, with the way that the products are using the information, the way that customers can interact. They have a clear sense of how they can share their information or choose not to share their information or engage with the product or not engage with the product. So it's a constant iterative process, but we're really excited to be testing products through that. And we've gotten a lot of really, really great ones through that. Bridget described a couple of those. So we're really excited about that. Yeah. And also, I will just also say that we're making a concerted effort to make sure that we have a really strong partnership with all of the products, particularly those that are a part of this engagement, because we really want to make sure that we have that relationship and that we're able to provide the feedback to the fintech makers that the students have. If a product doesn't have a great customer service, if there's a piece that's missing, we want to be able to share that back and forth and really be able to build good products that actually help people to build their financial security.
Thank you, Megan. During this engagement, we intend to work with 4 HBCUs and reach over 20,000 students. So again, we're super excited about this opportunity. We've already begun laying the groundwork and ready to get this information out there to the field at large. Thank you so much for having us. Here's our contact information. If you'd like some additional information in regards to all things going on at Change Machine, and or to reach Dr. Lewis specifically in regards to the work that we're doing with HBCUs, please feel free to give us a call and or reach us by email.
Great, thank you both. And folks should feel free to ask questions in the chat. Question for Dr. Lewis, just wondering how the pandemic has impacted the students you're working with. I know you recently made a jump, but just thinking about that outreach that will take place through those student centers, are you finding that it's harder to reach students, or are they, more seeking out those resources and supports?
I wouldn't say that it's harder. We have to be a little more creative. One of the things that is unique about Black and Brown students and even Black and Brown learners, and we talk K-12, is that they are affective learners. And so relationship and rapport is very important. And so we often find ourselves, historically, students come by, they come in, they pop in. And so we have our hands on them, if you will, in that space. What we're finding, though, on both the campus I'm joining and the campus I'm coming from, is that our students really do look at this campus as an extension of their home. And so where a lot of our other colleagues at PWIs in the state are having a drop in on-campus living, our numbers have not dropped that significantly the way that we thought that they were. We've obviously had some shifts because families are deciding, whether or not they want to chance missing it. And so it's just really being intentional in terms of how we're connecting with them and not overwhelming them. So Bridget and her team and I talked about, what the virtual coaching would look like, even kind of the pattern in which that we would expose kind of abroad and then allow people to work through and decide if they wanted that one-on-one as a standing something where they can pop in, if you will, albeit virtual, to just kind of mitigate any kind of screen burnout and screen fatigue. But they're hungry for it, and really are primed because of the CARES Act and some of those other gifts I use loosely, that are supposed to provide this financial support, and students are eager to figure out, now how do I make that last a little longer? So they're hungry. We just have to be a little more strategic and creative about how we feed them.
Great, thank you. Thank you both, and feel free to answer any questions that come through in the chat. Pull up the next slide. Great, so from Saverlife and Steady, we have Neha Gupta, VP of Market Development at Saverlife, and Adrian Becker, VP of Business Development at Steady.
Hi there, everyone. I'm Neha from Saverlife, and I'm going to just kick us off with a little bit of information about each of our platforms, and then why we, from Saverlife's perspective, were really interested in partnering with Steady specifically, and what kind of drove us to apply for the grant. Next slide, please. So Saverlife is an online financial platform where we're really focused on empowering low, moderate income individuals to have a positive savings behavior. And we use financial education, and we have community forums, and we have, you know, the most important thing, we have these savings challenges where you basically get the opportunity to win money for doing something like saving money. And we have different races that run throughout the year, and our signature product is Scratch and Save, which every week if you save $5, you have the chance to win another $5. So we find these nudges really help encourage positive savings behavior. Next slide. Adrian, do you want to introduce Steady?
Sure, thank you, Neha. And similarly to Saverlife, which is why we thought, you know, this partnership and grant made sense, was that we also incentivize our members who are predominantly low income to not only increase their income but improve their financial health. So our core product helps connect our members to supplemental income opportunities, which is focused predominantly on gig, flexible, and part-time work opportunities. But in addition to that, we also offer cashback rewards for our members to try out other financial health products, whether it's from fee-free banking to savings tools to credit building products, and also other initiatives through some additional nonprofit partnerships that give access to emergency cash grants, specifically during this COVID period.
Next slide, please. So what really drove us to want to work with Steady and for this to be a tight partnership between us is that we find, obviously during COVID times, that folks are really focused on their income levels, seeing dropping income levels, and wanting to find ways that they can make more income. Obviously, if they do, then they could save more. And so that's when we thought that us partnering with Steady, when we see that our demographics around education are actually a really strong fit, where we have around 70% have a high school degree and about 25% a four-year college degree. So since we have those similar demographics, thought that this would be, you know, if we're going to focus on income and helping folks find maybe new jobs or new opportunities, that Steady would be a particularly good partner for us to work with. Next slide, please. Adrian will walk us through the user journey.
Great. So like I said, you know, we thought this was a great fit because of both of our platforms' themes of incentivizing users to develop more positive financial health habits. We've actually been partnered with Saverlife for quite some time now. They've been a great partner, but this grant gives us the opportunity to launch this sweepstakes, which we think can really bring some great awareness to both of our respective member bases. So both of our products have a bank account linking component. Steady will be referring our members to Saverlife. and Saverlife will also be doing the same and referring their members to Steady during this promotion. And on the Steady platform, we will be promoting our booster incentive. So if our members respectively link their account to Saverlife and to Steady, if they perform both actions, they will receive $10 cash back and also be entered into a sweepstakes where the grand prize will be $5,000 at the conclusion of this promotion. But once we both acquire the cohort from this particular promotion, we'll then be studying both their income developments on Steady through the data we'll acquire from their bank account linkage on that side, and then also Saverlife respectively, studying their saving habits from the user members that they acquired during this promotion.
And that's about it. Yeah, so we both need the linking to be able to kind of really study the what's sort of the impact of both of our platforms on our members. And so that is the big part of what we're trying to incentivize. We both have times when folks sign up as members to kind of have access to some parts of the platforms, but in order to really have full access and to really understand the platforms and participate, you have to link your account. And that's really what we're trying to drive here with this particular promotion.
Great, thank you. Folks, feel free to add your questions in the chat. I'm curious for Adrian and Neha, you mentioned a little bit of, touched on this a little bit, but can you talk more about your strategy for evaluating impact?
Sure. So I can start that off. As far as on the Steady side, so we have once a member links their bank account, we're able to view their transactional and income deposit history. We have an entire team of employees that work on identifying deposits from employers. So what we're able to do is once a member signs up for Steady, we can see their deposits from employers actually looking during a look back period, and then we're able to analyze the positive income effect after they join Steady in terms of jobs that they've found, or even some of the cashback offers that we have on our platform, and then analyze that lift in income over that period of time.
For us, it's all about savings bands. We have very specific savings bands that we're hoping to see people kind of leapfrog through. So we kind of look at where their beginning balance is when they first join, and then we try to see if they're able to ideally leapfrog, 2, maybe 3 even bands by the end, so that we know that even if they're having deposits and withdrawals coming in and out, that over time their average balance is sort of on the rise over the period that we'll be studying here. So that's generally what we look at Saverlife, is trying to see if on average the balance is going up, because we know that obviously withdrawals happen, people need to pay for emergencies or whatever it is that they're saving for, but that hopefully overall their savings go up. So that's a key metric for us.
Great, thank you both. Go ahead and pull up the slides for our last partnership. You're going to be hearing from Kimberly Gartner, co-founder and chief partnerships officer at Canary, and Rochelle Gorey, co-founder and CEO of Spring4.
Hi, everyone. Next slide, please. As she said, I'm Kimberly Gartner, co-founder of Canary, and I'm pleased to be joined by Rochelle Gorey, founder and CEO of Spring4. And I'm also glad so many of you have hung in till the end here. So next slide. We're pleased to share with you our partnership plans, but first though, we want to share some context on our organizations. Canary is a mission-driven enterprise contributing to the evolution of the 21st century social safety net to ensure that in times of financial need, individuals can access emergency funding with dignity. Canary created Grant Circle, a platform that delivers cash grants to individuals experiencing financial hardship through the workplace and beyond.
Hi, and I'm Rochelle Gorey. Spring4 is a social impact fintech company here in Chicago, and we believe when people are experiencing financial challenges, it's because something's happening in their lives that makes it impossible to pay. So we've created a powerful tech platform that connects people to local vetted financial health resources. And we're very excited to be working with Canary. We will be integrating Spring4 into their Grant Circle program. So what that will do is provide employees with additional critical financial health resources right at that moment of need or crisis. We have a database of over 18,000 local financial health resources spread across 575 cities. So together with Canary, we're really well positioned to work with employers or really any organization that has employees or consumers in need across the country. So large or small, we're really excited to work with employers.
Thanks, Rochelle. And next slide, please. Canary grew out of our founder, Rachel Schneider's Financial Diaries research, which I suspect some of you are familiar with. Grant Circle is designed to help people in times of significant hardship. In the midst of this global pandemic, it's not surprising that most of our grants are due to COVID-19 plus loss of income or COVID plus a medical event. We know that financial stress hurts workers and also impacts their employers. And as many others have cited today, we know that systemic inequality means Black and Latino and other groups are disproportionately impacted. The right money at the right time matters. These emergency relief grants are designed to help provide breathing room. They can't provide all the relief someone needs. That's why we are really pleased to integrate Spring4 into our platform. Our hypothesis is that access to emergency cash grants plus these other resources will have a greater impact for the employer and the employee. We believe that access to these resources will help all employees, even if they're not experiencing a qualifying emergency. On the next slide, you can see a couple of the screenshots that we have in staging right now. So we're piloting first with one of our employer partners in the healthcare space. The screen on the left shows you the homepage where people come to access the grant application or to give to the Grant Circle. So when we integrate Spring4, they'll also have the ability to find money-saving resources. So maybe an employee doesn't have a current emergency that would qualify for a grant, but could still use some help. They can click on that bottom button to find money-saving resources. If an employee does have an emergency, we'd expect they'd first click on that top button to request funds. They'd then complete a streamlined application in our mobile optimized website. And then when they're finished, they would come to a screen that says they successfully submitted their request. And that's where we'll remind them again that additional help is just a click away. You can find these money-saving resources.
Right, and then the employee will see this list of trusted local resources to find financial health. It could be anything from childcare resources, help reducing prescription drug costs, help finding utility payment assistance. Again, 18,000 vetted resources, very local in nature. We're really working to direct people to organizations and assistance right in their own neighborhood. We worked with Canary to customize which resources we would make available. So we have 30 resources or categories available. You know, these are very much things that are in need. And to give you an example of how this might work, we have a real life example, Tanya, so who is a renter who is really having trouble making her rent. And through the Spring4 platform, she was able to connect to utility payment resources, which brought her $180 in monthly savings, which really strengthened her security as a renter, and she was able to avoid eviction. So these are precisely the type of emergencies and challenges that we're looking to address and face and solve for people through the Canary platform.
The next slide shows some results from research on our grants today. We know that Grant Circle provides immediate relief and immediate impact and meaningful relief. At Canary, measuring the financial impact for our users is a core part of our business strategy, as is measuring value for employers. When people onboard into the Grant Circle, they complete a financial health survey using the questions developed by the Financial Health Network. after we make a grant decision, Canary surveys people at 3 different points in time to understand their user experience and the impact of the grant. As part of this program with Spring4, we're going to continue those impact measurement efforts. Plus, we'll be tracking engagement with both Grant Circle and Spring4. We really want to understand the value people receive from access to local resources, as well as the impact on people. We're really excited to demonstrate the power of this combination of emergency cash grants and financial health resources. We welcome any questions you all have. Go to the final slide, Ferg. Thank you.
Great, thank you both. I'm curious whether you're seeing increased demand from employers for your respective offerings and this joint offering due to the pandemic, or how those conversations have changed.
Yeah, at Canary, we've absolutely seen tremendous impact and increased demand. March and April were really intense periods, and we were actually we'd actually taken a pause from our pilots because we wanted to rebuild our tech. So we were able to triple our dev capacity throughout March to bring as many employers on board in April that we had hoped to onboard this entire year. And so since then, we've continued to add more employers. Interestingly, many of them are credit unions helping to serve their employees, as well as nonprofit organizations working to serve their employees as well. So I think I saw GreenPath on the line. They've been a trusted partner and pilot partner from the very beginning with us. Rochelle, I know you've been seeing increased demand for Spring4 too.
Oh yeah, absolutely. I think that the pandemic has really unveiled that really everyone is just a day away from a potential financial emergency or challenge. And so I think companies across the board understand that this situation that we all find ourselves in is of no fault of our own. And so everyone is really stepping up to say, how can we provide assistance and direction and help, whether it's a product or a service, because you know, people are very much struggling. And unfortunately, it looks like, and we revealed a study a couple of weeks ago, long-term implications of the pandemic. And here we are 8 months later, and we're still in it, and no end in sight, unfortunately. So people are stepping up, and that's a good thing.
Yeah. Well, thank you both. And folks who are listening, feel free to add additional questions in the chat. Go ahead and move to the next slide. We are going to pull up one last poll just to see how some of these solutions that our presenters have talked about compare to the work you all are doing. Okay, so it looks like building savings is the area with most overlap between our attendees and our presenters, but plenty of overlap across the board. I think this tends to be a very aligned audience. Go ahead and go to the next slide. So the next steps for our Nonprofit-Fintech exchange team, we are in the process of developing our 2021 consumer need, which might sound crazy because we're just launching our 2020 grantee cohort, but that planning is starting now. And you should stay tuned for updates via our newsletter. We can share a link in the chat if you're not receiving those. And then we are targeting January of next year for our next Nonprofit-Fintech exchange event. So stay tuned for an invitation there. And if you'd like to connect with one of our grantees, one of the presenters today, just a reminder to fill out our post-event survey and let us know who you'd like us to connect you with. And then another thing to share is that later this month, the Financial Solutions Lab Accelerator Challenge will be launching. So that's our FinTech Accelerator. And this year it will be focused on helping low to moderate income individuals and historically underserved communities build resilience and navigate systemic financial health issues, many of which, of course, have been exacerbated by the pandemic. So we're excited to launch that as well. We hope you'll join us on October 20th and 21st free for a free online event as we explore the trends shaping the financial health landscape, identify proven solutions, and share effective strategies to support those who need it most. That's our Emerge Insights event coming up. Next slide, please. So this is the survey that we mentioned. It'll go out via email, and then I think Carla will be popping it into the chat. And if you'd like to get in touch about speaking at a future meeting, please email me. My email address is on the screen. We're always happy to connect with folks in this field and explore ways to collaborate. Next slide, please. So all that remains is to thank you all for joining today and to thank our presenters for speaking. I know it was a lot of projects to get through, but really glad we were able to share those with you all. And thanks as well to my colleagues, Carla and Chris, for all their work making this possible. We hope you will come and join us at a future event. Thanks so much.